Hey CashOps fam, welcome back to the channel. Today, we're diving into the exciting world of stock investing. Maybe you've heard stories of people making a fortune in the market, or maybe you're just tired of your money sitting in a low-interest savings account. Whatever your reason, you're here to learn. And that's awesome. Now, investing can seem intimidating at first. There's a lot of terminology thrown around, and the constant news updates about market fluctuations can be nerve-wracking. But fear not, CashOps is here to guide you through the process, step by step. Before we jump in, let's address the elephant in the room: risk. Yes, investing does involve some risk. The stock market can go up and down, and there's always the chance you could lose money. However, the key is to focus on the long term. Historically, the stock market has trended upwards over time, and with a smart strategy, you can significantly grow your wealth. Here's the beauty of it all. You don't need a ton of money to get started. In fact, some apps let you invest with as little as $250. That's like skipping a few fancy coffees each month. So, how do we actually get started? First, you'll need to choose an investment platform. There are many reputable options available, each with its own features and fees. Do your research and find one that suits your needs. Consider tax-advantaged accounts like IRAs or ISAs, depending on your location. These accounts offer benefits like tax breaks on your investment growth. Once you've chosen your platform, it's time to fund your account. Most platforms allow easy deposits through bank transfers or debit cards. Now let's talk about building your portfolio. Here at CashOps, we recommend starting with a diversified approach. This means spreading your money across different assets, like index funds. Think of an index fund like a giant basket filled with a variety of stocks from different companies. By investing in an index fund, you're essentially buying a tiny piece of each company in that basket. This approach helps mitigate risk because if one company performs poorly, the others can help balance it out. Many platforms allow you to set up automatic investments. This means you can choose a specific amount to invest each month, and it happens automatically. It's a fantastic way to build wealth consistently without having to constantly think about it. Now you might be wondering, isn't there a way to pick individual stocks and make a killing? While it's true that some people have gotten lucky with individual stock picks, it's generally not recommended for beginners. Successfully picking stocks requires in-depth research and analysis, and even the experts can get it wrong. Instead, focus on building a solid foundation with diversified investments like index funds. Then, if you feel comfortable, you can explore individual stock picking later on as you gain experience. Remember, investing is a marathon, not a sprint. Be patient, stay consistent, and don't let short-term market fluctuations scare you away. Starting early is one of the most powerful moves you can make. The magic of compound interest works wonders over time. The sooner you start investing, the more time your money has to grow. Let's dive a bit deeper into the concept of risk management. One of the fundamental strategies in mitigating risk is not putting all your eggs in one basket, a principle known as diversification. But there's more to it than just spreading your investments across different assets. It's also about understanding each investment's risk profile and aligning it with your personal risk tolerance. Ask yourself, how much of my investment can I afford to lose without losing sleep? This is crucial in creating a portfolio that reflects not just your financial goals, but your comfort with volatility. Another key aspect of successful investing is staying informed. The world of finance is dynamic, with factors like economic policies, market sentiment, and global events playing a significant role in the market's movement. By staying updated and understanding how these factors can affect your investments, you're better equipped to make decisions that align with your long-term goals. Now, let's talk about the power of compounding. Albert Einstein once called compound interest the eighth wonder of the world. He was onto something. Compounding can turn your modest investments into a substantial nest egg over time. It's the process where the earnings on your investments begin to earn their own earnings. This snowball effect can significantly amplify your wealth, given enough time and consistent investment. Here's a practical step to take advantage of compounding. Reinvest your dividends. Many investment platforms offer an option to automatically reinvest dividends from stocks or funds. This means any dividends you earn are used to buy more shares, increasing the compounding effect and accelerating your portfolio's growth. Let's not forget about the importance of financial education. Investing wisely requires understanding the basics of the stock market, financial planning, and the principles behind successful investing strategies. The good news is, there's a wealth of resources available. From books and online courses to forums and blogs like ours, taking the time to educate yourself can dramatically increase your chances of success. Lastly, remember that patience is your greatest ally. Warren Buffett, one of the most successful investors of all time, famously said, "The stock market is a device for transferring money from the impatient to the patient." Embrace the long-term view and resist the urge to react hastily to short-term market fluctuations. By combining these strategies with what we've discussed earlier, you're not just investing in the stock market, you're investing in your future. Stay curious, stay informed, and most importantly, stay the course. There's so much more to explore in the world of investing, but hopefully this video has given you a solid foundation to get started. If you enjoyed this video, be sure to smash that like button and subscribe to CashOps for more content to help you crush your financial goals. We'll see you on the next one.